While U.S. markets are not reaching new highs today, Peter Tuchman is, and he says the market is actually being irresponsible. Let's check it out. Hi, Peter. What's your stance today?
So look, overnight, yes, look, I'm not an economist, and I'm learning about what inverted yield curves mean. And yes, when it happens, it does potentially project or predict a recession coming in the far, far future. But all that being said, the inverted curve happened overnight for a small period of time. Yes, obviously the bond market is in a bit of a flux. There's anxiety and whatnot there, and we are trading at lows on the rates. But I think for the Commerce Secretary to come out and predict that there will be a recession, and to people to spin this negative narrative that we are that, by definition, a recession is two cycles, not 2 days or 2 weeks. 2 full quarter cycles of negative GDP with slowing economic activity worldwide and in the United States. I don't know that for a fact having happened, as opposed to 2 weeks ago when the markets were trading at record highs. So yes, if this was happening over a prolonged period of time, these predictors are clear. It's happened since 2007, and it's happened 7 times since the 50s. But it's 2 weeks ago we were at a record high. We're here today because of a couple of tweets that came out about one of the things that's fractured this market all along, which is a tariff question and the China trade problem. Okay? So that's irresponsible to disseminate information that's so economically sensitive on a tweet, first story. Then to start spinning a narrative about recession, when a recession by definition is a prolonged period of time of inverted yield curve and a prolonged 2-cycle period of time of economic activity slowdown. That's not what we're seeing. We're seeing a short, fast, and furious sell-off due to these predictions that are not really based in fact. And that's frustrating to me. I don't mind a sell-off. As you know, I don't own stocks, so I don't really care that way. But it's fast to see markets' valuation be completely decimated by irresponsible dissemination of information, I think is significant.
Now, Peter, we saw inflation is picking up traction. The Fed is expected to cut rates again this year. What do you think the reason behind it will be?
Well, so look, we've talked about it over the last couple of Wednesdays too. It seemed counterintuitive to lower the rates when they did, with the market at an all-time high, right? Okay, they did it because they said information that was sort of you had to dig to get about slowdown in manufacturing, slowdown in business investment. Clearly, there are some problems around the world. Right, there are some problems with China. Obviously, the tariff question is a big deal, and it will start eating away at our economic stability and foundation. But right off the bat, it's not. So that was their reasoning behind it. Okay, it's a bullet that you only really use when the market really needs a stimulus, right? And the economy needs a stimulus. It didn't seem that way 2 weeks ago, but we're in a new rule mode here. We can go from markets trading at record highs 2 weeks later to trading in recession mode. That's kind of nutty, right? So we're in a new rule mode. So as far as that goes, so will this sell off here over these few days? Let's just be clear. We had a week that was really fragile last week, but we had a nice rebound coming out of it. Then you had Monday, big sell off. Then you had yesterday, a big rally. We opened down 60 points yesterday. The president tweeted, "Oh, no, I've changed my mind on the tariff thing. Let's postpone it to December." And we rallied 600 points. That was fast and furious. And then today, overnight, this yield curve, the press is spinning the recession story. So what I think you're seeing is people who are investors in a market due to fundamentals are staying away for the moment, because we are a tweet away from up or down 1,000 points. When you're doing that and you're buying stocks for the right reasons, for the fundamentals, and you can be completely sent into a turmoil over a tweet or a dissemination of information that's economically sensitive, then people who are the powers that be are trading big money, maybe sitting on the sidelines right now. And when you have a lack of liquidity in a marketplace, you can see a market move up and down 600 points at a drop of a hat. I think that's kind of what we're seeing. An overreaction intraday, a negative story that's being spun unnecessarily, and a market that's lacking liquidity because people have been really bashed around for the last 2 weeks.
Well, thank you, Peter, for giving us some clarity today. It certainly makes some sense to me, hopefully to our viewers, and we'll see you next week.
Love you all. See you later.